welcome to the Motilal Oswal studio. You're watching Buy Now, Sell Now on ET Now with me, Shriyansi Singh and Cheryl D'Souza. And over the next 1 hour, we'll get all of your stock-related queries answered from both the technical as well as the fundamental perspective. But first things first, we've got to take a look at the markets and quite a smart recovery coming in, Cheryl, as far as the markets and broader indices are also concerned.
Absolutely. A very good morning to Shriyansi. If you look at the markets, yes, so we are holding on to the positive territory of the day's lowest point. Only barely 7 or 8 stocks that are in the negative territory as we speak, with Adani Enterprising being the top loser, and the losses are only sub 1% or so. So yes, if you look at the market breadth, pretty healthy in trade today, with the list of gainers being Tata Steel, Cipla, Trend, Bajaj Finance, JSW Steel. These are some of the gainers in trade today. Add to the list Bajaj Finserv as well. While on the flip side, like I mentioned, you have Adani Enterprises that is among the top sectoral loser. Let's take a look at the sectoral print then, and you have IT index that is in the negative territory. Barring that, you have metal, you have pharma. Also, you have the realty index holding on to good strong gains in trade today. Yes, so it looks like some sort of a recovery creeping into the benchmark indices, but there are a lot of select names moving on back of earnings. So take a look at what Suven Pharma is doing. That one is seeing a bumper set of earnings, so 10% uptick around those levels for Suven Pharma. Apart from that, take a look at what Natco Pharma is doing. That is seeing the opposite of what Suven Pharma is doing in trade today. Natco Pharma is down about an excess of about almost 20% now on back of the fact that weak set of numbers coming in once again for this particular counter. Take a look at what Honasa is doing, because the numbers in the surface are pretty strong numbers coming in for Honasa. But the problem with Honasa being that the mother brand, that is the Mama Earth, that one is actually seeing a decline in the way how the performance has been. But nevertheless, the stock is holding on to good gains of about 5.5%. And Kotak Mahindra Bank, you have RBI that lifted curbs on Kotak Mahindra Bank. So on back of that, this one is holding on to gains of about 1.6%. A lot of brokerage notes coming in on how the company had lost a market share in the first 9 months of the financial year. Hopefully now they'll be able to make up for this. Apart from that, there's another newsmaker that you need to watch out for will be IIFL Finance and Muthoot Finance. IIFL Finance numbers were not that good. That's one of the reasons why the stock is down by 1.6%. But it's a measured fall coming in for IIFL Finance. On the other hand, you have Muthoot Finance. That one is seeing a good up move in trade today. Hopefully that is sustained. Yes, 7% uptick coming in for Muthoot Finance. Very strong set of numbers coming in. So these are some of the counters to watch out for in trade today. No doubt on the surface, on the horizon, when you look at the benchmark indices, pretty strong trade.
Well, absolutely, pretty strong trade on the surface levels when you take a look at it, but there's a whole host of counters that are buzzing away in trade, like Cheryl just mentioned. So let's kickstart the show, start taking all of your stock-related queries, and before we do that, do remember that the number that you can write to us is going to be flashing on the top of your screens as well as on your screens. There you have it. Do remember to mention the buy price for the stocks that you're already invested in, for the ones that you hope to be investing in. Do remember to mention the time horizon that you then have in mind. With that in mind, let's also kickstart the show, start taking all of your stock-related queries. And today on the show, we have G Chokkalingam, who's the founder and CIO at Equinomics Research and Advisory, joining us. The first query I've got to take, the one that is coming in for Natco Pharma from Vignesh from Bengaluru, Mr. Chokkalingam, because he's writing to us about the 150 shares that he's holding on to at a buy price of 1,200 rupees. So what do you have in mind when it comes to this particular counter? And also a very good morning to you.
Yeah, good morning. Sorry, I missed the stock name.
And it's 150 shares at a buy price of 1,200 rupees.
Slip down. That particular word slipped down. I mean, couldn't hear it.
Yes, it's Natco Pharma, 150 shares, 1,200 rupees buy price.
Yeah, got it. Sorry. Before that, small correction. Our firm name is Economic Research, and we have a research analyst. I am a head of research. This disclosure needed as per the SEBI mandate. Now coming to Natco Pharma, the only concern with this particular stock over last 20 years, I have been tracking it. The only problem is that there is a huge volatility in the business performance as well as in the stock prices. So very rare to see any pharmaceutical company to show this kind of volatility in the top line also, So, but however, having seen such a phenomenal fall, and also having seen tactical upside do happen quite periodically, I would give a bold call on Natco Pharma.
As a take coming in on Natco Pharma in trade today, hold call is what Mr. Chokkalingam is advising for this particular counter. Let me move on then. Let me take the next query then. This one is coming in from Navendu Sharma. He's writing to us from Ahmedabad. Mr. Chokkalingam, and his query is on Power Grid. He wants to know whether it makes sense to buy this one right now, and it's he's a medium to long-term investor and he's a senior citizen. So what's your take coming in on Power Grid? Because this one with the rest of the PSU pack also saw a sharp decline, about 16% decline in the last 3 months. What's your take now? Do you think it's the right time to look at this particular counter, or do you think some more pain may be in store for this one?
Yeah. Often it also gets impacted by regulatory measures. Senior citizen obviously would be very more conservative. I would prefer, Coal India to Power Grid. Both are PSUs, but the advantage of the Coal India is that now the dividend yield itself is more than 5%, and that stock also crashed a lot. But for the next 10 years, the demand for coal is going to remain very strong, and the coal prices are a substantial discount to international prices. So there is a lot of scope for Coal India to improve earnings and even increase the dividend. So I prefer Coal India to Power Grid.
All right, then that's a take coming in as far as Coal India and Power Grid are concerned. But the next one that we in fact have is coming in on Siemens and ABB. Arun from Gurgaon is writing to us and he wants to know if fresh buys in both of these names is something that he can be looking at.
Great companies, they both have corrected a lot. So no, it's very difficult to give sell call considering the kind of the promoter profile, balance sheet quality, and past track record. But still, I would venture to prefer L&T for Siemens and ABB, because in this turbulent market, L&T has got one advantage. Even now, 1/3 of consolidated profits are coming from the technology business, and that can act as a defensive in a market like this, because the capex is not growing substantially. So that would affect all three companies, but L&T drawing 1/3 of the profit from technology segment would be better placed. Also, when the rupee is depreciating, there is a possibility of IT segment helping L&T to relatively perform better than Siemens and ABB. So I would maintain buy call on L&T rather than giving buy call on Siemens and ABB.
That's the take coming in. Instead of Siemens and ABB, Mr. Chokkalingam would rather bet on L&T. Today there was an interesting note actually that came from BofA on ABB and Siemens, where they've gone ahead and upgraded ABB to a neutral stance while maintaining an underperformed stance in Siemens. And they remember that they as a house had gone ahead and downgraded the entire capex focused stocks. So from there on, they've made these changes to their portfolio. So that's one of the reasons why ABB and Siemens will be in focus today, and Siemens also because of the earnings reaction as well. Mr. Chokkalingam, I just wanted to get your view coming in on this next query that we have from a viewer. And a viewer wanted to know about, in particular, IT consumption and pharma. Does it make sense that in this market you only invest in these particular sectors? This is from Sanjeev Sinha. He wants to know fundamentally which of the stock in these sectors would look good. What's your take? IT pharma, yes, no doubt, a lot of sort of noise around these sectors, given the fact that you have the Trump admin at the helm in the United States. Today, there are some news trickling in. There may be, while talking about tariffs or reciprocal tariffs, you may find some sort of exemptions coming in for auto and pharma. That's one of the reasons why this sector today is a buzz. So what's your take? Do you think that IT and pharma, based on these US policy changes, is a sector to look at, and consumption basically back home, the fact that you have the budget and the rate cut being one of these good triggers or catalysts for the sector?
Yeah, very interesting question. Definitely IT, pharma, all of us know that they are a defensive sector, no doubt about it. But if somebody is asking question whether he can invest only in these two sectors, I think I would say hold on. Wait for how Trump makes proposals, particularly for IT and pharma exports from India into US, because our overall trade surplus from other products are not as big as what we generate by exporting pharmaceutical products and IT services to US. So you need to watch. We do have, defensive strategy and we do have a coverage. But my only point is that the investor should not decide to invest only in these two sectors, at least for next 1 or 2 months. Let us wait what Trump says. And within these sectors, we have a strong buy recommendation on Cyient Limited. Just to give an comparison, Hexaware IPO is open, and Hexaware IPO, if you see, the PE ratio is somewhere around 45, and for Cyient it is only around 29. And Cyient has got 100% subsidiary focused on semiconductor new business they just ventured into to start the production. So I prefer Cyient, and in pharma I prefer Dr. Reddy Laboratories. I believe quite safe. And second, FDC Limited, we also personally invested. Yesterday results came and the stock has crashed and it is now close to 52-week low. Why I like this stock is that 82% of the turnover is from the domestic branded formulation, and most of our branded formulation companies trade at 4 to 6 times enterprise value to sales. After steep fall, FDC Limited is available at 2.8. It's a cash-rich company, more than 1,000 crore worth of cash is there. Let us not forget the fact that this company has a 2 R&D center in heart of Mumbai with substantial infrastructure. So all this adds to a lot of intrinsic value. So these are the two pharmaceutical stocks we have a buy rating.
And time for a very quick breather on the show. When we come back, we'll continue taking all of your stock-related queries, so don't go anywhere.
Welcome back. You're watching bnsn on ET Now, a show where we get you answers for all of your stock-related queries. Today looks like a good day for the markets because for now, at least we are holding on to good gains with the advanced decline ratio actually tilted in the favor of gainers. For a second, I was taken aback looking at the charts, but that was a 1-month chart coming in for the markets. But today, yes, a healthy day coming in for the benchmark indices. Let me continue taking your query. Now we have Osho Krishan also joining us on the show to take all of your technical queries. Very good morning to you, Osho. Good morning to you, Mr. Chokkalingam. I miss wishing you earlier on. Let me now continue taking the queries then. And this next query that I have is coming in from Reema. She's writing to us from Pune. I wants to know, is it a good time to enter Coforge right now? She has a long-term view on this one. But Osho, I wanted your take on Coforge, given the fact that it is one of those marquee mid-tier IT company names in the last 3 months. Pretty good performance when you compare it vis-a-vis with the rest of the markets. What's your take? Do you think these levels are good one to enter into Coforge?
Very good morning to both of you. Well, coming to the technical perspective of Coforge, then this counter has been into a corrective phase or might be called as a profit booking phase because on the technical front, it has been making the lower lows, lower highs kind of a pattern and is struggling to breach the zone of 100-day exponential moving average. So I'm expecting that until the zone of lower lows, lower highs subsides, one should stay sidelines from the counter. Once there will be a buying traction coming back in this counter, which will be approximately above the zone of 8,400, then only it will be advisable to accumulate this counter. While on the lower end, again, if the dip further aggravates, then the zone of nearly 7,500 to 7,600 will be a decent zone where one should start accumulating the counter in a staggered manner.
Keep accumulating the counter in a staggered manner. That's the take coming in from Osho as well. Osho, good morning to you. And the next query that I have is coming in from Dr. PVN Rao, writing to us from Hyderabad. I wanted to know what your take is when it comes to Tejas Networks, because he wants to know if he can be investing into this particular counter. Osho, what do you think?
See, overall, this counter is again into a very strong sell-off phase. So there is a possibility that from here onwards, there can be a decent upsurge in this counter, but technically the parameters are still into oversold terrain. So I would expect or I would advise to either the stock consolidates around the zone of 820, 830, then one should start accumulating, or if it gives a strong buying traction and if it merges or it goes beyond the zone of 940 in the coming period, then only one should try to accumulate. At these levels, better to avoid discount.
Right. That's your take coming in on Tejas Networks. But let me get your also view, Mr. Chokkalingam. For a long-term investor, what should be the strategy when you talk about Tejas Networks? Make sense to buy this one for the long term, or instead look at some other counters which look attractive and will be better for on an investment purpose?
Yeah, in fact, I have analyzed recently only. since Tata Group has taken over this company, I got attracted to evaluate. Business model is great, but right now the company is going through a difficult time in terms of working capital stress. If you look at receivable and inventory, and unfortunately, a lot of orders are still coming from company like BSNL, for which the government allocation has come down a lot in this budget. Therefore, I see a lot more pain for Tejas Network in the short term. It is better to wait for at least another 10% correction before finding it attractive, because at current price also it is extremely stretched in terms of valuation.
That's the take coming in as far as Tejas Networks then is concerned. The next one that we have is actually coming in from Nikhil Sharma, who's writing to us from Mumbai. Wants to know about Shriram Finance Osho. 40 shares, buy price is 553 rupees. What do you make of this particular counter?
Overall, I'm expecting a decent surge in the overall financial space. So Shriram Finance has seen a decent corrective phase in the near period, but if I'll be quoting a very small time frame chart, then the counter have started gaining traction from the lows that it has made in the month of January. So from there onwards, there has been some kind of buying traction coming back into this counter, and any sustainability above the zone of 570, 575 can give a very strong boost in the coming period. So I would say rather stay invested in this counter, and even one can accumulate even higher levels of 575 for short to medium term perspective. So this counter is having a kind of a bottom formation. One can definitely keep into radar. Any breakthrough above 575 can give a very strong buying traction in this counter.
All right, that's Shriram Finance. On the charts would look like there is a sharp dip in it. No, there is a corporate action that needs to be adjusted in this rate. Let me go to the next one then. This one's coming from Preeti. She's writing to us from Kochi, a long-term investor. About 25% loss in Kirloskar Oil at this point in time. Mr. Chokkalingam, what should she do? Make sense to stay put with Kirloskar Oil, look to exit, or what sort of strategy should she use right now?
Yeah, I saw the results. There seems to be a lot of stress on its financial services business, which is run through the subsidiary. Otherwise, it's a great company. Even now it is slightly stretched in terms of valuation, but still one can hold on, having seen such a phenomenal fall in the stock price, and also the core business still doing reasonably well. So somewhere around 800 rupees could be the possible target price for Kirloskar Oil, and therefore I would give a hold call on Kirloskar Oil.
Whole recommendation coming in as far as Kirloskar Oil then is concerned. The next one that we have, Osho, is coming in from Ranganath, writing to us from Bengaluru. Wants to know about the 2,500 shares that he's holding of Zee Entertainment. Buy price was 140 rupees. He wants to know if he should exit or hold at this point.
See, overall, Zee Entertainment is into a very strong correction phase. There has been no respite or pullback that is being seen in this counter. And overall, there has been a lot of news related to G, so there can be some continuation towards the indecisiveness in this counter. So I would rather say if someone is already holding a position, then it is approximately hovering near its 52 weeks low. So there is a possibility that it might take a breather around the zone of 95 to 100 odd levels. If it does not, then there can be a continuation on the lower end. So I would advise to stay invested with a stop loss of 95. But on the higher end, I'm not expecting a very strong recovery or pullback in this counter. But for short-term perspective, 95 should be seen as a stop loss, and one can hold. Once there will be any pullback, try to exit the count.
Alright, then that's the take coming in as far as Zee Entertainment then is concerned. The next one, Mr. Chokkalingam, is coming in on PSU stocks, coming in from Sunil, writing to us from Vadodara. And he's also mentioned that he's a very big fan of yours. He wants to know if you have any PSU stocks that you can recommend from a medium to long-term basis.
Two stocks I can recommend in the small and mid cap. One is Bank of Maharashtra. I believe it's a phenomenal stock. I mean, it is the best banking stock in the mid-size category, perhaps in the entire banking space, because its net NPA is just 0.2%. Hardly there are just one or two more banks in the whole industry having a net NPA at such a low level. Not only that, the quarterly profit itself is several times the outstanding net NPA. So in one go, this bank can become even zero NPA. I don't know why the management with such a credible achievement has not thought of doing that. And secondly, the business is still growing, far outperforming the industry growth. And in terms of valuation also, now it has come down a lot because of the recent correction. And also focused on Maharashtra state, which is the richest state in the country. I believe Bank of Maharashtra is well positioned to create a significant wealth in the next 2 to 3 years. Second stock is Balmalari company. Personally, we have invested. Unfortunately, the stock has corrected, rather crashed a lot, and it gives excellent dividend, 8.5 rupee dividend per share. And also the P ratio, it has come down so low now. It's primarily into logistic, but most important insight is that it's a diversified company. Major business used to be logistic, but now it has become a very dominant player in the travel and vacation. That segment alone is expected to make 100 crore profit. And in the market, travel and vacation business are valued at even 30, 35 times. And that travel and vacation segment alone is more than the entire enterprise value of the company now. So therefore, I would strongly recommend Balmalari company as well.
All right, those are some of the counters to watch out for, but please do note the flashes on the bottom of your screen, because a crucial one coming at that, because sources have told ET now that the RBI governor, along with his team, is meeting with select MDs and CEOs of NBFCs as well as industry representatives. More on that on the other side. Don't go anywhere. Buy and sell now on ET now, and we are live from Motilal Oswal's studio. Take a look at the flash on the bottom of your screen, talking about that the RBI governor with his team is meeting the heads of select NBFCs as well as industry representatives. This in order to take stock of the concern in the MFI industry. My colleague Anjali is here with all of that. And Anjali, this sort of a meeting is pretty important and of prime importance, more importantly, because the fact that the RBI governor is meeting the representatives for the first time.
That's right. Now, as we speak, the Reserve Bank of India is meeting with select NBFCs as well as industry representatives. This meeting is being held with MDs and CEOs of these institutions. Now, the RBI Governor Sanjay Malhotra is chairing this meeting, and the Deputy Governor M. Rajeshwar Rao is also a part of this meeting. Now, what is important here is that this is the first meeting that the RBI Governor is holding with the NBFCs after he took over, and these discussions are likely around the issues that NBFCs as well as MFIs have been facing. We've seen high interest rates being charged, and the cost of funds have also risen for MFIs, as banks have started reducing their funding to these institutions. So overall, there are a host of issues that are likely to be discussed with the MFIs as well as the NBFCs that are present in this meeting.
Right. So thank you so much for that, Anjali. Definitely we'll come back to you once you get some more details on what was likely discussed in the meeting. For now, we definitely know that there will be a discussion talking about the NBFCs, the MFIs issue, as well as given the fact that NBFCs also have been at the center when you talk about the way how the RBI has been functioning over the last 1 to 2 years or so. It will be a very crucial meeting, and we will watch out for all the details coming out of that. Thank you so much for that, Anjali, once again. But let's move on and let's actually get Mr. Chokkalingam's view coming in on the entire NBFC space. Mr. Chokkalingam, what's your take coming in on that? And I'm only going to ask you based on the earnings performance for most of these NBFCs and the way how they've performed. Today we have the earnings of IIFL Finance as well as Muthoot Finance that we're looking at, where Muthoot Finance has done exceedingly well.
Yeah, definitely the traditional quality NBFCs are continuously doing much better. The problem is with only the small NBFCs, namely the small finance banks, small finance companies. The problem is that the structure of NBFC has changed a lot in the last 5 to 8 years. So earlier, you had a large NBFCs competing with the banks, and also depending on banks for drawing their money for lending from the NBFC. But in the last 5 to 8 years, what happened? Different new segment of NBFCs have entered the business, entered the stock market as well. So many microfinance companies have entered the market. So many finance companies converted as a bank. So then the PSU banks consolidation happened. That also intensified the competition. So the competition intensity has increased tremendously as different layers of financial services industry started emerging. On top of it, the credit growth has come down for both banks and NBFCs. So all have come together. And on top of this, you also had fintech companies going very aggressive in lending. So all these have caused, competitive intensity, and the slight slowdown in the GDP growth also has caused this problem. So I'm sure RBI would give, some concession to these microfinance companies which are in trouble in terms of some, flexibility in provisions, all that. So if such thing happens and small microfinance companies recover, the investors can use them to, cut the loss and exit very small finance companies which are trading above 2 times price to adjusted book value. Otherwise, quality companies, they can stay invested.
That's the take coming in as far as NBFCs then are concerned. Osho, I'll come right back to you with the next query that is coming in from Thomas George. He's writing to us from Kochi. He wants to know about Tata Tech actually. He wants to know if this is a good bet going forward. What do you think about this one?
To a very strong, steep sell-off, I would say. There has been no respite or pullback in the recent period. And once it breaches the zone of nearly 980, from there onwards, it has been into a very strong correction phase. But looking at the overall technical setup, the counter is hovering way below the 20-day exponential moving average. And until we see a revival above the zone of, let's say, 780 to 800 odd levels, till that time, conviction still lacks in this counter on the buying front. But above the zone of 800, one can definitely try to accumulate the counter. For now, as it is a falling knife, better to avoid. The time we see a consolidation or a pullback, then again we can look for buying opportunity in Tata Tech.
All right, so that's a take coming in on Tata Tech and what can one do in this particular counter. Let me take the next query then, and the next query is coming in from our viewer Gaurav, writing to us from Bangalore, wants to know, is it a good time to buy HAL or wait for the dip? He's just looking for a period of about 6 months or so. What's your take then on this one? Osho, HAL, do you think that he should wait for some more dip? Because if you look at the management commentary, and he's spoken yesterday as well, and a lot of brokerage notes coming in, how the order book is looking very strong and robust for HAL.
See, overall, this counter is one of the biggest counter in the defense sector, and I'm expecting that there is a possibility of a strong pullback. But in looking at the technical structure, the counter is hovering in a kind of a consolidation zone. So technically, we need to wait for a breakout of a sloping trend line, which will be near about the zone of 3850, 3900 odd levels. So that will be an apt zone where one should try to accumulate this counter from a short-term perspective. But overall, if the duration is longer, then one can definitely try to accumulate, but in a staggered manner. One should not be very much aggressive in accumulating or putting all the capital in HAL at once. There should be a staggered manner of accumulating this counter from a time horizon of, let's say, 3 months to 6 months. That time horizon, one can definitely see a decent positive movement in terms of return.
All right, and the next one that we actually have, Mr. Chokkalingam, is coming in on IRAD-A, 250 shares at a buy price of 268 rupees. What do you make of this one as well? Because Krishnan Rajgopal, in fact, has written to us about this particular counter.
I'm sorry.
It's IRAD-A. He's talking about 250 shares that he's holding on to at a buy price of 268 rupees.
Extremely sorry, the word is dropping, the company name.
Well, absolutely. So it's IRAD-A that he's talking about from the renewable energy space, and he's talking about 250 shares.
Sorry, I haven't tracked this company in the recent time.
Okay, Osho, I'll come back to you with this one. What do you think about this one? Do you track this counter? What do you make of this particular holding that he has? Because it's 250 shares, 268 rupees buy price.
See, overall, this counter has seen a very steep correction and has plunged below the 200-day simple moving average. So overall, the technical setup suggests that one should wait, or obviously the position is held with the client. So I would rather say that one should stay invested in this company, because the next support lies around the zone of nearly 160 to 155, which is a very strong support for the counter. While on the higher end, again, it is having a very strong resistance near the zone of 220 to 230. So I'm expecting that there can be a range bound movement in IRAD-A from the zone of 160 to 230, a broader range. If there will be any kind of breakthrough, then only we can see some kind of traction coming back in the count.
Then that is the view coming in on IRAD-A. On that note, thank you so much, Osho, as well as Mr. Chokkalingam, for joining us on the show and for actually resolving all of the stock-related queries. We'll slip into a break on this edition of Buy Now Sell Now. When we come back, more news on the other side. Don't go anywhere.